Welcome to today's Monitor live stream, Data Validation, the Secret Sauce for Seamless Automation. Whether you've already invested in automation or you're considering it for your business, you want to maximize those capabilities and see real returns. That's where proper data validation comes in. It's the difference between automation that delivers and automation that disappoints. With competition for quality deals intensifying, equipment finance companies can't afford systems that create more problems than they solve. Today, we'll explore how clean, verified data keeps automation working for you, not against you. Hold on a second while I share something here. There we go. We're pleased to partner with Northteq on this live stream today. Based in Minneapolis, Northteq provides automated lending solutions to over 175 lenders, helping them increase revenue while making better lending decisions. Their flagship product, Aurora, combines a Salesforce-powered loan origination system with portals to provide an exceptional borrower and vendor experience. Northteq also partners with industry leaders in credit, fraud detection, and other essential services, including Middesk, Trost, and PayNet, giving lenders tools for smarter, streamlined decisions. Northteq is now primarily owned by Arthur Ventures, a Minneapolis-based growth capital firm. For more information, you can visit northteq.com. And now to guide us through the discussion today, we have our panel of industry experts. As the panel is talking today, please feel free to put any questions that you might have in the Q&A feature in Zoom. It should be in the Zoom control functions on your screen. Our panel today is Kristian Dolan, CEO of Northteq. He will be moderating today's session. We also have Kary, Director of Operations at Geneva Capital, Colin Campbell, Head of Partnerships at Middesk, Maudlin, CLFP, Chief Operating Officer at Wintrust Specialty Finance, and David Trost, Director of Product at Northteq. And with that, I'll hand it over to you, Kristian. Thank you.
Great. Thank you, Rita. And thank you all for your time. I mean, you're all here sitting through a webinar on data validation. On the surface, doesn't sound super exciting, but I think you'll find that the conversation will be really compelling. So this is the third webinar in our webinar series on automation. Our last webinar was 99 problems, but automated docs ain't one. You can find links to that on our website. So if you're interested in the content here, encourage you to go to northteq.com and check that out. So like data validation, like Rita said, it's not the most sexy topic, but it's overlooked, but it's hugely critical in getting automation to work. You know, without clean data, you're going to create delays, you're going to create rework, and ultimately you're going to create a disjointed experience for both your vendors and your borrowers. So it's really a critical piece in the automation workflow. Well, what can you expect today? So we want you guys to walk away with substance, and I think you're going to get that based on today's dialogue. This is going to be full of practical discussions with real world best practices. You know, we've brought in data providers, we've got technology experts, and we've got lenders who work in this day in and day out, and they've been doing it for decades. So you've got a combination of professionals that are going to give you some great insights. We're going to walk you through data challenges and data collection. Like, how do you get the data? What's the challenges around there? How do you validate what you get? How do you create a seamless experience when you're doing all this with the vendors and borrowers? So that's the goal for today. So maybe to kick it off, I'd like to ask maybe Chris, if you could just like give us some context here. Like obviously things have changed in the last few years, things have evolved, but you've been around for, you know, a couple decades in the industry. Tell us why is automation important? Why is this a relevant topic right now?
No, thanks, Kristian. Yeah, and I continue to realize how old I am when you can say a couple decades in the industry. But yeah, you know, in my time in the industry, and just for everybody, you know, we're always focused on speed, turn times, and providing service to the customers. And one of the things we talk about a lot at Wintrust is really we're a means to an end, right? The customer really, if they didn't have to finance, they wouldn't have to, right? And they want their equipment. They want to be able to just get it working, get it producing for them. And for them, that really means speed to accessing the equipment, right? And whether that's a 2-hour decision, 24-hour decision, to them, they just want the equipment. And the if you start to think about all of us are consumers on some level, right? We all have smartphones, we all have access to these different technologies that are running out in the consumer world. On the business side, that's been lacking a bit on the commercial side, right? We're growing accustomed to in our day-to-day lives of just being able to apply for a credit card, get a home mortgage, do all these things just on through your phone. And those are things that are starting to creep into the business world because our signers, our guarantors, people that are on all of our contracts, that's what they're getting used to in their personal life. And so it really starts to build that pressure and that expectation from those folks, our signers, our guarantors, to why can't you guys provide that service? Why can't I get these documents this quickly? I remember, again, Kristian alluded to it 20 years ago when I was in sales, we used to allude to, how difficult it was comparing our process to a mortgage, right? How difficult it was to an SBA loan. And we're starting to see those timelines creep up, right? And we're no longer leading the pack. And to me, that's why this is such a hot topic right here, and why automation is so critical, because the only way we're able to provide those good services to our end user customers is you've got to be able to get them in their equipment quicker. And
Mhm.
that's the primary purpose, right?
Mhm. Absolutely. Yeah. No, I see what you're saying. I mean, I think, it's neat too being in equipment finance because I think I've been in for a couple decades. I'm with you there, Chris. And it's neat to see the evolution and seeing, especially, like you coming from a bank and seeing how long like other commercial products can take. We're still pretty aggressive. We're still pretty good on the equipment finance side, but you're absolutely right when it comes to comparing us to other retail like experiences, we're lagging considerably. Even for deal sizes, I mean, these sometimes the deals are smaller than personal deals, right? Or retail deals, and it still takes longer. So, well, awesome.
Yeah.
Well, go ahead.
No, they definitely can be. And I think, you know, one of the things I would encourage everybody that's listening to the call, that's on the call when you're in your day to day is, try to just think about it from the end user standpoint, right? Oftentimes we're always trying to compare ourselves to our competition and, oh, they can get documents in X amount of time or, turn decisions in so many hours. But really you want to put yourself in your customer's shoes. And we went through a process a couple years ago at Wintrust, really kind of looking at our end-to-end process. And the analogy was a pizza, right? When you call to get a pizza, when you hang up the phone, all you really care about is when's that pizza going to be at your door. You don't care about how efficient they are from getting the dough to getting it rolled to getting sauce on there. You don't care about all those internal efficiencies that the pizza company is worried about. All you're worried about is when is that pizza going to be at my door and I can eat. And so it was really a light bulb moment for a lot of us where it's like, wait a second, we really got to think about the customer from that standpoint. They're buying equipment, software, whatever it may be. They want it and they want it to be working. All of the efficiencies that we're working on, it's a matter of how do we get them in there quicker and in a much more efficient way for them.
Great. Okay. Let me kind of like bring it down a level now. So this would be directed at Nate and anybody else that wants to jump in. But so Nate, like you always hear about getting the deals off the street, right? And I'm sure as running operations over there at Geneva, high volume, small ticket shop, there's pressure. You've got competition. I'm sure your salespeople are saying, "Hey, we gotta get these deals off the street." Tell me kind of like what that means, what that pressure is, and how do you go about accomplishing that?
Yeah, and I think the key there is going through an intentional exercise of defining what is enough. Because you hit the nail on the head. We hear it from sales every day. Just get the application in the door, deal with everything else after the fact, which just sounds great in theory, but you can create a negative experience if you don't have the information you need to actually make a decision. In my opinion, if you can't make a decision, you don't actually have an application. And so that is going to differ for every organization, what your minimum criteria are for making a credit decision. And so that's where you have to be intentional and truly go through an exercise of what do we need to make a decision. That's going to be more challenging the more seasoned your credit staff is. Because if you've been in the industry for just shy of 2 decades, I've only got 19.8 years, not quite 2 decades. But that can really go back to the days of writing with pen and paper a credit evaluation. You're used to having more information and it's getting comfortable. Do you truly need this information? If you've already embraced automated credit decisioning, credit scoring model, then it becomes a lot easier. Then you know these are the variables we need to get an answer out of the model. But don't fall complacent with that either. Challenge yourself to look at the variables in your model and determine, are they necessary? Always review the performance index of the model. Can something be taken out and still give you good performance out of the model? It's proceeding with the minimal amount necessary to make a credit decision that really, in my mind, defines taking a deal off the street.
Yeah, interesting. Do you have like examples based on your career of stuff that either you collected before and now you've decided I don't really need that, or vice versa, stuff that, you're not collecting, but you're collecting now that you found has been critical?
Yeah, absolutely. And some of it is not necessarily not collecting, but moving when we collect it.
Oh, yeah.
So things you need, like a driver's license. Hey, great if you can get it up front with the application, but you don't need that to make a credit decision. So don't require it as part of your application process.
Mm,
Even more basic information like your tax ID number. Yeah, you absolutely have to have it at some point if you're going to comply with Know Your Customer. But none of the business credit reporting agencies require that as an input to get a good result. So don't make it required. And so that's where we talk about scale back your application to the bare number of inputs you need to get a decision out of it. And so it's down to the finite line items of information, like a federal tax ID number is the primary example there. And I think Chris hit the nail on the head too, is always approach it from the customer's viewpoint. You can get your feedback from your sales team, get your feedback from your credit team. You have to have that. But then go to your application and say, when I'm putting this in as a customer, is it realistic to complete the process? Where do I start to ask questions if I'm actually entering the application? It was amazing to me when we went through that exercise, how many of our analysts had never actually seen our online application form. And so they had no idea of why they had all these frustrations of pieces of information were missing. As soon as they looked at it, they say, oh, well, because you're not asking for it. So
Yeah.
it's an important exercise to go through.
Yeah, I think Nate hit a couple points on the head there. I think it's the like to have versus must have, and I think you hit at what part in the process are you, right? And one of the things while you're talking, it kind of struck me is, we have all these experts that are in these different roles at all our organizations, whether it's credit, whether it's documentation, whether it's your funding team, portfolio management. A lot of them are very good in their specific niche, right? And not to be a CLFP plug, but I think that's a great part of that program is helping people understand the different avenues that a transaction goes through. Because a credit person may want something, but they may not understand that, hey, it might not be good to ask that up front, right? Now you become an outlier, right? Nobody else in the industry is asking that. And so understanding from a sales perspective what they're looking for, and same thing from documentation. Hey, we have to have a federal tax ID, but hey, we might be out of market if we're asking for that, and our competition's not asking for it. So, I think it's important to get feedback from all the different unit leads and people that are part of that. But it's also important for them to understand, where in the cycle you are, and in many ways, how do you get that deal off the street, right? If you have the best application in the world. You ask every single question, you're going to get all the data possible. You're going to have driver's licenses. If someone fills out your application, you're going to be perfect. But no one's going to fill out your application because you're the only person asking for that. And so it's a balance. And our group lead David Norman always says, you can be 100% right and doing no business, right? So it's trying to figure out that happy median there. And it's tough. I mean, everybody on this call struggles with that on a daily basis. And I think the key is, we've mentioned a couple decades on here. we have to be open and willing to continue to question our knowledge, right? And what we take for granted. Something that worked 20 years ago and was a industry fact, everybody did it. You've got to question that every single day, and you got to continue to question it. Yeah, great points there, Nate.
Chris, I actually
Yeah.
have a rebuttal to you. How does abandonment rate drive that decisioning process, or how does it change what you're asking for? Do you look at that fairly regularly?
So great question, Colin. I think that might be better for Nate. We don't have a great direct application process where we're looking at that now. Most of ours is third-party originate paper. So Nate, I'll defer that over to you on the abandonment rate.
Yeah, if you are taking your direct applications, I would work very closely with your IT or your vendor partners to be able to capture that abandonment. If the abandonment rate is one thing, but to really be able to drill down into the abandonment point, where at in the application do they stop filling it out? And then how do we overcome that? That's a credit to our IT staff, something we do have available, and it's immensely helpful in driving those conversations of do we truly need this or not?
Yeah, that's a really good, it's a really good question, Colin. I think we see that a lot with our clients too, where like back to the tax ID, all right, Nate, like we do have clients that ask for the tax ID, but they'll do it last, right? Like they'll make sure they've got the email, the phone number, like everything else they need, and they're going to ask for the tax ID. But if they like bail from the application process and don't provide the tax ID, at least they have the other stuff where they can follow up and move forward without it. So it's a really good
And
question.
real quick, not to keep driving the note here, but on tax ID, I'll give you a quick, interesting scenario that happened on our side. So we've got two different ways to take apps, right? One are from our third-party originators, and the other is from the end users. And the sales folks that lead the third party, they wanted to push to not require the tax ID on the initial application, follow for it after the fact. Our vendor sales team said, no, I want tax ID as a requirement, because if they're at the dealership, they want the documents. So he is thinking from a sales perspective, how do we make the documentation process more efficient? I don't want to follow up for a tax ID. So if they don't have the tax ID, then we don't want that application. So it was interesting. Same organization, two different channels and two different perspectives on what is required or what's not required. And so
Wow.
I think
Yeah.
it kind of goes that one size doesn't fit all, even within a single organization.
That's a great point. I mean, because like back to the discussion again, the deals off the street, if ultimately you're going to have this disjointed process and they're not going to sign, yeah, you might get the app, you might pay for all these uh, third-party pulls, and they just don't sign the docs because then you follow it up with a bunch of data you need, and the applicant bails. So yeah, interesting. Okay, so. Moving on then, like David, kind of building on this theme of needing different data points at different points of the cycle. You've been a lender, you've worked for a bank, you've worked for a fintech, you've worked for a portfolio servicer company. From your perspective, can you kind of give us your like what data is needed at the different points in the cycle, and how have you seen that data gathered?
Yeah, definitely. So to Chris and Nate's point of being credit guys, I think they did a good job covering off on, the risk perspective of what needs to be captured in order to safely move an application forward. But as far as like reducing friction, there are other ways that you can make that happen, right? I'll give an example of the fintech company that we worked at. We're heavily involved in doing transportation deals. So by collecting, the type of transportation business we're interacting with up front, how many trucks they had in their fleet, whether they're a sole proprietor or not. We were able to tie that back to how we then interacted with that customer post submission to ensure that we'd have a high probability of them actually answering the phone, right? So a sole proprietor is going to be driving during most of the day. You calling them and leaving a voicemail is just going to frustrate them and create another to do for them. But if you call them, late in the evening after they've stopped driving, they have a higher probability of answering. It's a better experience all around for everybody to keep the deal moving forward. So I think it really depends, I guess, like on the type of transaction that you're doing, the channel that it's coming from, whether it's embedded lending and you're trying to get all that information via API and it needs to happen up front, or if it's more of a personal touch sales rep driven process that you want to have that engagement with the customer.
Yeah, great point. I mean, it kind of goes into like what Chris was saying, where it's like know what your customers experience, know the customer experience you're trying to accomplish, and if you're working with somebody who's driving a truck and is on the road all day and they need financing, probably not best to call them in the middle of the day, and it's kind of a bespoke solution.
No,
So,
that's
Colin, please, Chris.
real quick. Sorry to keep interrupting. Dave, that's interesting because, in some ways you're shifting the due diligence up front and you're doing almost a pre-screen. And so it comes down to the data sources that you're using to pre-screen and how confident are you in those data sources, and really interesting point. I think, important to understand, like, all right, if you're going at specific niches, what are the useful data sources, right? What is a trustworthy data source? We as lenders, we typically are dealing with some of the larger ones and more generalized, but yeah, if you're going into a niche, that's key to understand. How many trucks do they have? Whatever valuable data is out there that can help you pre-screen and potentially pre-populate some of these required fields to where I know we all deal with it from time to time. We almost have them pre-fill on an application. You're doing it personally or whatever. It's helpful, right? And sometimes it's right, sometimes it's wrong, but it's nice if it's pre-populating some of your information and you're just validating it versus needing to type it in. But great point there, Dave. Sorry to interrupt you, Kristian.
I'm going to interrupt one more time here too, because I think David made another good point there of it's going to vary based on what your end goal in the business process is. Are you truly going for end-to-end automation, or do you want that customer talking to a person at some point? Do you want them talking to a sales rep?
Yeah.
If you want that interaction, create the natural breaking point where they can follow up with those additional questions. You don't need the customer to input them. Your rep can collect that information while they're doing the other things you want them doing in the process.
Yeah. Yeah.
And to
Great
that
point.
point, it totally depends on the industry, right? You got some industries that, it is very paper, intense still. People want to, might not be the same anymore. We did logging years ago where they didn't want anything on DocuSign. They literally, the dealer would take it out and everything was paper signed. And so it depends on that industry, that space. And I think the key there is one size doesn't fit all, and you've got to be nimble and understanding that, okay, what works in one space may not work in another niche or industry.
And if I could jump in, 2 weeks ago at a fintech event, I sat and had lunch with a gentleman who's a lender from a bank, and they don't do anything digitally upfront. Everything is paper based. They've got one customer that has 10,000 almond trees. This is in Northern California. And he said, digitization is not something for the front of office for us. People come in with their son, handing the business over to the son. They come in, they expect a spit and a handshake to do business. And they lend based on things they already know versus things they don't. And it was a reminder that not everything is digital, not everything is as easy as we would like it to be, but for them, that's how they do business. I thought that was just a different perspective.
Yeah, for sure. I mean, I think you see it a lot in our industry, right? Too, with like differentiating yourselves. You've got larger banks that have lower cost of funds that are going to be rate competitive and they're going to see flow deals and they're going to win via rates. You're going to see independents that need to create a differentiator. And sometimes that's going to be some personal engagement, hand holding through the process. And that's their value add. So great conversation. So kind of like dovetailing to this, Colin. So what's your experience with like talking about the data validation that needs to happen? Let's bring it down a level. I've got a deal. I've got my app in. I've got enough to pull credit. It's time to do docs. Can I just generate docs? What are you seeing from your customers? Can I
No.
just like no? What else do I
Well,
need?
yeah, I mean, it's very situational, but things like and employment verification, equipment lending, asset verification, that's key. Valuation and appraisal reviews, insurance binders, redisclosures if applicable. Those are the things that are required. Again, situationally. Um, However, they're missing or delayed, and there's a whole bunch of reasons why they're missing or delayed. Some of it is borrower delay. They may be slow to respond, especially when documents are complex or confusing. And I think everybody has seen complex and confusing docs. Manual processes. Some lenders still rely on manual collection and follow-ups like the bank I was just talking about. And that leads to dropped or delayed tasks. Third-party dependencies, title companies, appraisers, insurers, employers, they all move at different speeds, right? Changing circumstances. A borrower's income or a job status or the asset may change after approval, and that requires re-verification as well.
Mhm.
David, lack of system integration, systems use different stakeholders. Often they don't communicate seamlessly with each other. We see that in our business when we're using APIs. It's not always the easiest thing to integrate a bunch of different systems, and then regulatory triggers that can get missed.
Mhm.
Staff may miss thresholds requiring redisclosures. So there's a whole host of reasons why the data is missing or delayed. Um, and I look at today, I recently heard a stat where there are 400,000 new businesses being created each month when there's only 300,000 new people born in the US.
Mm.
There's a lot of room for things being missed, a lot of room for delay and process inefficiencies.
Mhm. Yeah. So
I,
like,
I, I think
please.
real quick to kind of jump in there a little bit too. I think part of the challenge you got too is just lack of centralized databases or
Mm.
accessibility to data. It's pretty fragmented, not just from a business standpoint, but you think across the country, right? You may have easy access in a county to be able to look up specific original filings.
Yeah.
The very next county does not have that accessibility, right? And so there's not uniformity in terms of access to data or information.
Mm.
Um, and as Colin was talking, I kind of was just jotting down some notes here. As we're talking about the speed of documentation and different things that we can put in place to get the customer their product. There's things that we do from a speed to automation, whether it's providing insurance, right? So you don't need to follow up for insurance upfront and funding. It doesn't delay it, but that can cause complications post funding, right? Where now the
Mm.
customer's getting billed for insurance. So it's, there's two sides to the sword that we always have to be careful on. We're trying to provide an efficient product, but now you're creating potential customer service or headache issues in the background, where they would have just happily provided up front, but our intent to be so fast and efficient, has caught them up in now we're dealing with customer service calls and disgruntled customers because they're getting insurance billed on top of everything. But yeah, I think disjointed data is one of the biggest challenges. And
Mhm. Yeah. So like dovetailing to that and kind of like what you're kind of like focusing on that vendor and borrower experience, Chris, like like asking signing up for insurance, but then them being surprised when they get their bill, things like that, or like what Colin was saying, like additional artifacts that are needed throughout the process. So like from a Geneva standpoint, Nate, like how do you guys balance that? So you've got an approval, you're going for docs. Like how are you re-engaging with the client to get what you need? Any tricks of the trade there?
Yeah, I think the general premise we've been skirting around here is there are certain pain points that are unavoidable. There are things that aren't going to be friendly or are going to cause issues, whether it be an insurance certificate, a driver's license. It's usually your non-digital things that require opening up your wallet, pulling something out, going to another person to get it. And it's where in the process do you want that? And so because those things involve the non-digital side of things, the most important thing is to set up the expectation. And so if you are running vendor programs, it's ensuring a good training program with those vendors that they know they hear it from you rather than the customer of where the pain point is, so that when the customer complains about this, they've already been coached. Oh yeah, you have to do that. They can be your ally. They can become your second employee in that regards. Um, from the customer standpoint, it can be a little bit more challenging, especially in today's world, and depending on your customer base, like David mentioned too, if you have a trucker that isn't able to look at their phone in the entire day. We take for granted sometimes because we all sit at a desk and work behind a computer. You read every email that comes across, you read every text. Your customer isn't always doing that, and so you can't rely on that communication. And so it is building your documentation process to be able to satisfy the open conditions that were left after the credit approval. You want to minimize the open conditions from the credit approval, but some of them are just unavoidable, especially if you're trying to take that deal off the street with the minimal amount of information, like we talked about earlier. And so it's having an interface that on the customer's timeline they can interact with. And so it's clearly defining what is needed to move on to the next step and clearly defining how they provide those. So thanks to our partnership with Northteq, they have a great product called Checklist, really helps facilitate that, not just at the time of documentation, but really at any point in the process, you can steer the customer towards that to know what they have to complete.
Well, thank you for the plug, Nate.
Yeah,
Checks in the mail.
Yeah, that was well placed there. Yeah, I think Nate, one of the things you hit on the head there, I think, is in many ways, I think it depends on really, how do you do business, right? Are you a broker? Are you an independent who has your own balance sheet and you're going to be holding this paper and potentially selling it? Because I think you have to be able to understand what your takeout source is, or are you holding it to term? Because that's going to, a different funding source that you thought you were going to take the transaction to, you didn't meet all their requirements, right? So how do you make sure that you have all the necessary documents or data points that lender is going to need, right? And so making sure that, again, depending on where you are, again, broker, independent, bank, right? You may have more defined rules as to what you have to have up front. And that could be a pain point for a customer. I've seen in the past where you thought it was going to source A declined it or moved on, and now you have to readjust and go back to the customer and you're asking for more items when they thought it was a done transaction. So yeah, trying to weigh that where you're not grabbing everything for the most belt and suspender source, but making sure that you're actually making a good experience for that customer.
Chris, so a comment I'd like to make over top of that is, when does compliance become a benefit as opposed to a detractor? Today people are like, compliance gets in the way of transactions and slowing things down and stuff. But at what point do you look at a customer and say, by doing this, we're protecting you, right? When we do this, you can be confident that no one else is doing something with your name and getting a loan or getting something that they shouldn't have. That's why we put these controls in place to protect you as the customer.
I'm laughing, Colin, a little bit because I would like to know the answer to that too. But and all truth be told, I think unfortunately it's in instances of fraud, right? And so you're almost we go through a ton of compliance and a ton of audits on the bank side, and the reality is you're focusing on that 0.1%, right? And so 99.9% is impacted for that 0.1% instance. However, that 0.1%, that's an issue, right? That's a huge reputation risk. And I think unfortunately, again, what I said earlier, the customer just wants their equipment, right? And hey, I just want my equipment, right? I don't really care that you're doing all these things because you're protecting my social security, whatever. Now that guy goes through fraud or that gal goes through fraud, all of a sudden they're concerned. So I think the challenge is, at the moment of the transaction, it's not important to the borrower. It's a challenge and a distraction for them, which is why we always have to try to figure out ways to facilitate that and try to make it as less impactful on them. But yeah, as working for a bank, I wish compliance was, that part of it, right? But you ask a sales, just what I said, right? You have to understand where you are in the process, right? So you tell that to my salespeople, and they would throw up all over me when I would say that, right? So yeah, but it's a great question. Not one you hear about often.
Yeah, I think
A good exercise to go through in that is truly diagramming out, whiteboarding. You've got your happy path where customer submits their application, they check every validation box, they get their documents, they provide everything you need. They never have to talk to a human. Great. That's not realistic for every transaction. And maybe your business is such that if they don't check all those boxes, you're okay losing them. But I gotta imagine the vast majority of people on the call aren't okay with that. They want a way to capture them. And so it's diagramming out, okay, if they fail this checkpoint, do we want them to go through an alternate checkpoint? Do we want them talking to a human? How do we get past that stop sign in the road with the least amount of friction? And that determination can be different from company to company, but that's an exercise you need to go through.
Yeah, definitely. I completely agree. I think the opportunity though is to leverage the regulatory requirements of like KYC or KYB to reduce friction during the application process by working with like Middesk, for example, and collecting as minimal information as possible and then showing that back to the borrower and saying, hey, is this you? Do you trust this information that we got from Middesk? Yes, okay, move forward. So it's a good balance of, making it so the customer has to hand over less information while still moving the application forward in a way that both the lender and the customer are happy with.
David, any other thoughts on technologies or tools for kind of like making that data collection easier?
Yeah, one thing that we see is so traditionally the application process for our industry has been you get the application, you pull a data provider, you go back to the customer based on what comes back from that data provider. And so it's a very linear onboarding or intake process. So the trend has been with better integrations to data providers and then returning either more niche or better quality data, more flexible loan origination systems, and the quicker ability to recall information that's put in those systems to create a non-linear credit application process. So you're really
Right.
breaking up and blurring the line between app entry and underwriting. So an example of that could be you have an individual who submitted a credit application, you run them through OFAC, which is really cheap. They pass, you verified their name is correct. Then you can pull credit in line with that application happening, and you might get a frozen file during the credit process while they're still on the application screen. So in the last screen they see is something like, hey, we saw your file was frozen. Please call your representative. So before they've even submitted the application in a traditional way, they've already been, pre-qualified. They've already been validated on their identity. They already know what the next step that that person needs to take is, the next action that's going to happen on their application without ever interacting with the lender.
Yeah. Seems to complement what Nate was saying about like really making sure you understand the non-linear flow. And we hear that from our clients all the time. It's like this process isn't linear. You can in a software system as a software provider, we want it to just go through the manufacturing line, but it iterates back and there's all these different cases where you veer from the main path. So one thing that comes up quite a bit with our clients and just through the discussions that we've had in the past is business ownership. Big challenge, right? Like, I think there's some real solid sources for consumer data, and that is kind of why a good reason why consumer loans can sometimes be a little bit more streamlined as we heavily rely on the bureaus and things like that. But like it doesn't seem like that's always the case on the business side. So Chris, can you expand on that? Like how is this a real problem? Can you explain the problem? How do you guys address it?
Yeah, no, it's definitely a challenge, right? And you think about, from a credit adjudication standpoint through documentation, what you're trying to confirm is, are we talking to the right person, right? Do we have the right signer, right? Do we have, the controlling owners, are they the actual ones executing the documents? And we alluded to before, there's no great national database that would allow you to look up a company and it gives you, hey, here's the 4 owners and their percentages of it. And oftentimes, you're reliant upon documentation that can in some ways be generated easily and fraudulently, right? Whether it's a tax return, right, to show that, hey, here's ownership. Well, the challenge with the tax return is you don't get, necessarily the stamped copy that the IRS has certified and saying, hey, the data on here is accurate and valid. Same thing with minutes right. So you kind of, the county conversation I brought up, the states, the challenge is it's so fragmented right now that oftentimes as a business, you have to start to make these decisions on, okay, what are we willing to accept? And there's a potential that what you're accepting is fraudulent. You're trying to do cross-referencing and validation, whether that's through PayNet, Dun & Bradstreet, Experian Business. You're trying to use a third-party data source to confirm the information that you're receiving from the obligor. And part of that is it creates friction, right? We're all talking about how do you eliminate the friction, and the challenge is you might be getting 100% clean information from the obligor, but now they're guilty until proven innocent. There might be, bad information or a bad file linked on one of those business reports, and now you're forcing that obligor to prove to you that the information they're providing is accurate because your third-party data source doesn't align with what they're showing. And again, it kind of comes down to that 0.01%, 0.1%, 0.5, but it's a challenge. In a perfect world, that we have a singular database that we're all able to access and confirm and validate. I think we all could probably see the challenges of that from a fraud standpoint. If anybody ever hacked that system, it'd be a lot of challenges. But I've mentioned the consumer side a bit, right? The consumer side, a lot of that's reliant upon the credit bureaus. But at the same time, they're not immune to fraud or, as you saw with Equifax, data breaches. So it's a huge challenge, and a lot of it I think comes down to the business and deciding what are you willing to accept from a comfort and level and standpoint of this is acceptable, and then where are you in the data in the finance stack, right? So are you the bank? You're making the end call. You're the takeout source, right? Or you're an independent. You're willing to rep and warrant the work and the items your team is validating to that funding source, right? And so you start to think about these different business overlays that we build into the process to allow everybody comfort, whether it's the takeout lender, whether it's the bank, whether it's the initial finance company. Everybody has to have their level of comfort and what they're willing to sign for, and in many ways, a test on.
Colin, do you have from a Middesk standpoint, what's your thoughts on business ownership and
I was on mute. Look, you could be a business owner today and tomorrow you're not a business owner. So, what you have on a piece of paper was accurate yesterday versus today. I think, and I have a background in information security, so I think in terms of vectors, right? So how many different vectors can you get to validate information? We use authoritative sources and non-authoritative sources. The non-authoritative sources will back up the authoritative. Things like web analysis or other attributes that gives you a picture. Because I think at the end of the day, what you're not focused on, you're looking at three things. One, the ones that are going to approve right away, all good. The ones that you say no to all day long, just move. It's the messy middle, that middle third where you're not sure of, where you have to focus on. And so, it really is a combination or an amalgam of different data sources that helps provide, I think, the yes or no answer.
Well, and I think on that point too, Colin, the vector makes, as you start to think through the logic and what you're deciding on, you look at the overall transaction, right? And what the transaction risk might be, right? If I've got a construction company getting a dump truck, it's less likely that that's a fraudulent transaction, right? Because you start to align the different vectors. And so, okay, if we're trying to confirm ownership, right? Okay, you start to line these up, all right? And you get different levels of comfort based off of the overall transaction and what you're looking at. It gets messier, I think, as you kind of get further away from their core collateral that's required for that business, right? So as you start to get out of that inner circle, which just makes sense, that decision becomes a little bit more difficult. But the vector approach, I think, makes total sense. I think it's something everybody's doing just with the transaction information you're looking at.
Great. Well, hey, I want to take this opportunity to reach out to the audience. We've got about 15 minutes left. If there are questions that you guys have or statements you guys would like to make that we could comment on, We'd love to hear from you. So go ahead and add your questions or comments to the chat, and we'll do our best to answer them. So kind of moving on. Maybe kind of taking a step back, like, so this all comes down to like what we can automate, what we can't. So David, from your perspective, from working at, again, lender, fintech, software company, servicer, is it doable? Like is end-to-end automation from app in to sign docs 100% automated? Is that a realistic goal?
Yes, I think it's a realistic goal, and it sort of looks different for everybody. Um, and the type of transactions you do. So I mean, the same thing that we've been talking about, but breaking it down into specific actions that you want to take with your customer and finding the right KPIs to attach to, whether it's like application conversion or reducing time from approval to docs out, is the way that I would look at, measuring success. And we have at all those other different companies that you mentioned that I worked at. And then at like a high level, to ensure that it's impactful long term, I mean, you should be able to look at it, applications processed per employee, or not increasing the more FTE. So doing more with what you have today should be the ultimate automation goal.
Yeah, I think just to touch on what David said, I totally believe it's possible for specific niches and industries, right? I think if you think you're going to have a one size fits all automation from a generalist standpoint, I think you could be opening yourself up to some risk. And hopefully you understand what that risk is you're taking on. But I think it comes down to the data sources, right? And if you are dealing with a specific niche, we all know there's different trade associations, and we've got great trade associations in the equipment finance space. And so each of these industries have trade associations, which they typically have potentially data sources, data sets. There's vendors that provide that information. And so I think the more knowledge that your business, your team has on that specific industry, I think you can get yourself closer to that ultimate goal of end-to-end automation, because everything David's saying makes 100% sense. Really, you're trying to bring in that to the application process, right? And make it as frictionless as possible. So if there's a data source out there for a specific trade association that tells you all the parameters that you really need to know, that you can leverage that. And so I think that you have to invest the time, and you have to have folks on your team that are willing to kind of really go deep into those spaces and understand and become the experts. That's one of the things that we always look to do when we're bringing on new partners, is understand. It's part of the way that we manage our risk at Wintrust. Is we know we're not going to be the ultimate experts, but we want to partner with businesses that understand the niches that they're in. And that's one of our risk strategies, is really working with partners that are embedded in those industries, because they help us understand some of the risks that we would be blind to if we were just looking at the standard data points that you would look at on an application only standpoint. FICO, time in business, PayNet, Experian, DMB, it may not matter in that industry, right? Colin was talking about the almond farm. It might be number of trees. It might be, there might be some variable that you might not understand unless you actually understand that niche. And so I 100% agree with David. It's possible, but I think you could be up for a world of hurt if you just try to take that and apply it across a general approach there. What's your thoughts there, Nate? I mean, I know, yeah.
Yeah, as I say, we are fairly niche. We're by no means a generalist, and I agree. It does become much more realistic, and agree with what David said. It is absolutely possible. But to reiterate something I said earlier, I think it would be foolish to expect it on 100% of your transactions. And you're going to severely limit your business if you approach it with an expectation that we have this end-to-end automation and we don't need staff because we're going to have this touchless process. You need the employees and the people able to deal with the fallout. And some of it comes from your customer base. Even within a niche, If you have people in their 20s and 30s, technology friendly, on their phone all day long, great. But with a service like TruePic, it's great. It helps verify the identity. The person in their 70s might not be comfortable taking a picture of themselves on a video with their cell phone. They're just not. And so you have to have an alternate way of getting that deal done still. You don't want to lose that customer just because of that deviation.
Yeah, great.
I think one of the things we've been trying to focus on, when I was in credit, we always try to focus on like 100% accuracy. And as I moved to the ops side, one of the things we're focusing on is taking chunks, right? So if I can handle 50% through that channel, right? 50% is better than zero, right? And trying to incrementally get that better and more efficient, but you always have that alternative path to your point, Nate, where to that 50% or that 60, whatever that percentage is that doesn't fit what you're building, you've got an alternative path. And while you might not have 100% coverage, you're better than you were the day before.
Yeah, don't let perfection become the obstacle to progress.
Yeah, great points. I'm gonna use this opportunity, Chris, and what you said about data providers. So as a quick plug for the Equipment Leasing and Finance Foundation. So they published a paper back in 2023, the Specialized Apps, which is really was meant to be kind of a buying guide for like all these different APIs. So, Middesk was on the list of like, hey, you need validate name, Secretary of State. They're on the list of providers amongst many others. They are in the process of doing a new one. Should be released later this summer, which is going to list out a lot of these different data providers. I don't think we've found like how many trees an almond grower has on their farm. Like, I haven't seen a service provider with that on the list yet, but as we become more digital, maybe it's just a matter of time. So just a plug for that. Look out for it. Look at the 2023 version. It's a pretty cool paper, but you'll see an updated, refresh one, which I think will add a fair bit of value. So, okay. So Colin, you work with a lot of clients in a lot of different industries, not just equipment finance. Um, what's your recommendation to the people watching this panel on kind of next steps on this automation validation journey? Like where should they start? Yeah, what's your recommendation?
No, I absolutely love this question. I've been with Middesk since December. Prior to that, I did 6 years at UiPath, automation company. So I love this question. Um, and I will start by saying one of my favorite childhood books is The Little Prince. And who knows the answer? How do you eat an elephant? One bite at a time. That is automation. Um, it really is looking at what are the mundane, boring, repetitive tasks that are occurring right now in your operation. Um, Identifying which ones that human error can have the biggest impact on, right? Look at that. And I forget who it was that said, get on a whiteboard, model your process. I also love that because, that's something I like to do. And in there, identify where those automation pieces are. Again, the automation journeys I saw fail the most were the ones that tried to bite off the biggest, hairiest, ugliest processes. They failed because you were trying to do too much. Automation is the automation journey is one in steps. It's never one where you go 0 to 100. It's almost that old saying, 1% a day after a year makes a lot of perfection. Um, and I always look at what to automate from three lenses. One, the technical complexity. How difficult is it to implement, or how simple is it? Organizational readiness. How ready is the organization to give up that task to a machine? Are they going to still run a spreadsheet, or are they going to accept the results, right? And then finally, what's a business benefit? Right? And the business benefit could be financial. It could also be compliance related. It's not always money. It could be that, we're passing a compliance check quickly and easily. And so when you look at those three elements and you score, it'll be very obvious which ones, you would want to go with first. Then my last thing is, and I spent a lot of time in IT and stuff. when you are looking at any commercial off-the-shelf software, take it out of the box. Don't make the software work to your requirements. Amend your requirements to work with the software. I have said it many, many times before. A lot of companies invest a lot of money and time in R&D and have developed a solution that works for the industry. You know, most industries aren't that unique that you have to modify the, you know, the system requirements to meet your business requirements. I always opt for modify the business requirements to work with the software.
Great recommendations. Anybody else, anybody else that's going through this journey have any suggestions?
Yeah, the last point was critical of once you've made the decision to invest in software, stick by that decision. Don't fall victim. And this is the challenge with if you are a more experienced company with a more seasoned staff of going through change orders and requests with your software provider. And we went through some of these headaches recently of making the new system do exactly what your old system did. Well, what was the point of going to a new system then? The whole point is you are going to have to change your ways. And it's critical to get buy-in from your staff when going through that.
Yeah, I think the point I would add would be have your business process, right? And, you know, to Colin's point, Nate's point, you know, you may need to adjust that to the software, but I think you have to critically look at your business process every year at least, right? And critique it, question it, and just go through it and just really ask, you know, why are we doing this, right? Do we need this? And just it's really a, you know, a defense and make people actually think and question it and defend the reason why you do or don't need something. Because I can tell you just in the time we've been at Wintrust and we've done this, right? There's a number of things that we cut that were, you know, sacred cows in many ways, right? Like, oh, we always have to have that. And as you really question it, you don't. And it was just something of a safety blanket in many ways. So I think you have to be able to take a critical eye to everything you're doing and not take it personal, right? Like you're just trying to get better. So
Great. Well, only got a couple minutes left. I think I'm gonna wrap up with that last question. I just want to thank each of you. I thought your contribution to this webinar was fantastic. I thought the dialogue was great. I hope want to thank everybody that attended for their time for listening to us. We will make this recording available as well if you weren't able to stick around for the whole thing. So appreciate it. Any closing thoughts from anybody?
I think the main closing thought I have would just be don't strive for perfection. You're never going to get it. So I think Colin's 1% better every day is a great place to start.
Absolutely.
Fantastic place to end it. Thank you all. Have a great day.